All right, ladies and gentlemen, we're back with our end of day PulseWave report with yours truly, the Algo Capitalist, aka the Vulcan, coming to you live from PulseWaveTrading.com, home of the world famous PulseWave Price Trigger reports. We cover everything from cryptos to stocks to futures and forex. All right, so jumping right into things, we have quite a few charts to go over today. Got a couple of requests from the trading room, so we're going to jump right into it in no specific order. All right, so the first chart here is your Bitcoin future. So you're still in a bear market and you have a bullish trend momentum reading, which means that the market does want to um, do some type of rallying, a bear market rally, that is. Hold on one second. Sorry about that. So we don't have a bear market rally yet, though. We have a rally alert, and this was day 2. Remember that the rally and crash alerts do tend to lead the market 3 to 5 days out. So because we did not get an immediate reaction in the market, or confirmation, I should say, yet, we're still waiting for that confirmation to take place. So we're watching, waiting, and we're going to see if the market can break out or where the bears reclaim the market like they did back here. All right, so next up we have Apple Computer. All right, so Apple Computer is in a bull market with a bearish trend momentum reading. So we're expecting the market to move down. Now, it did move down a little bit today, a little tiny slither of downside production. We believe the market is going to drop down to the 160 level to test the trend line support, which corresponds to the top of the Kumo cloud. So once a successful test is done, then I think the market can relock in on the bull side and continue to trend higher. But as you can see, the market is in an uptrend. It started off as a bear market rally back here on the week of January the 6th and continued to rally. Switched over from a bear market to a bull market and continued to rally. Now it's looking like the market may have topped out. Looks like Apple may be done. So we will see. We'll wait and see if we get confirmation here, but it's looking like it could be done. But right now we're looking for downside. Next up is Microsoft. Microsoft has a similar pattern as Apple. It started its bear market rally on the week of January the 9th, and it's been hitting new 52-week highs back to back to back to back to back. All right. So this one is wide open, but we have a problem. We had a gap up on the week of April the 26th, and that gap has not been filled. So methinks that we're going to get a crash alert any day now, and that's going to pull the market way back down to drop back down below $300 a share to get to that 295 to 290 level to test not only the trend line support, but also to test, but to fill the gap. So we got a gap fill that's coming, and we got a support between 295 and 290, and Microsoft that will be upon us any day now. We'll wait for the confirmation with the signal. Next up is Meta. Meta's in a bull market with a bearish trend momentum reading. We had a negative bot check, and we haven't got downside production yet. That means a downward move or thrust or sell-off, crash, however you want to say it, is imminent in Meta. We had the initial crash alert back here. We did get a little bit of downside production. Then we got a negative bot check. That means major downside is coming. And the top of the Kumo cloud around the 210 level is the initial downside target, followed by the 180 bottom of the Kumo cloud support. So that is coming. Also, you have this gappage from the week of April the 27th that needs to be reconciled also. the market came down from the crash alert and gave you a little bit of that, but this market needs to come down a little bit further. It needs to drop below 220, definitely below 230. I would give it to 220. We'll say 220 is the initial downside target on the Meta, followed by the top of the Kumo cloud at 200. Next up is Tesla. Tesla is in a bear market. And we had a bullish trend momentum reading, which was the trade setup for a bear market rally, but that has not materialized. The market has obeyed the bottom of the Kumo cloud, acting as resistance that pushed prices back. Now we have a neutralized market as it's starting to tick back up. 190 is the upside initial target on any type of a bear market rally. It also is a key resistance zone. 190 is a key resistance followed by 210. After that, the market is wide open. All right, sky's the limit. But for now, the big test is 190. But it first has to come off and neutralize. Remember, we don't bother neutralize markets until they come off neutralized. So right now, this is a non-touchable. We step aside Tesla until it comes off neutralized. Next up is Amazon. Amazon's in a bear market with a bullish trend momentum reading. We're well into a bear market rally that started the week of March the 14th and has given more buy signals along the way. And the market is wide open to the top side. It's running. Looks like it just took out the major resistance zone of 114. All right, so that has now been bested, and the market's well on its way. It's wide open. It won't have resistance again until it gets up to around the 125 level. So Amazon is definitely wide open to rally, and I don't see any gaps from the bear market rally, which is a very good thing. So this market is wide open and can really run at this point. Next up is Caterpillar. Caterpillar is in a bull market, and the bull market has reclaimed the price action as of today. Prior to today, the market was in a bearish trend momentum reading. You're in the sell the rally mode, so price action was under a lot of selling pressure. Today, we got a rally alert for tomorrow's trading and the beginning of a bullish trend momentum reading. The upside initial target is going to be around 225 to 230, and then the top of the Kumo cloud at 240. All right, so we'll see how much the market can move if we can get a bear market rally going. It tried a few times back here, but really couldn't do anything about it. Just kept getting sold and sold and sold. So we'll see what happens. But right now, we got a rally alert for Caterpillar for tomorrow's trading. Next up is Theta. Now, yes, I did say it looks like Theta could fall. I said that a while back, down to like 25 cents. Is that still possible? Well, yeah, anything's possible. But we go by what we're seeing right now. And as of right now, this market has been just flatlined. Nothing has happened. It hasn't done anything. This is a weekly chart. Look at this weekly chart. This thing is just like flat dead, going back a long ways, going back to 2021. The price action has not changed. The price has not changed all that much since 2021, which is kind of wild when you break it down into perspective. But right now, this market, I can only go by what I'm seeing now. And right now, it's just all over the place, but it's in a bear market. You have a bullish trend momentum reading, so it has a propensity to rally. You had your rally alert from the flip-flop back here on May the 12th. You did get a little bit of upside production. Still can't break that dollar mark, though. But it's still under the auspices of the bull market momentum reading, so it is a possibility. But the market needs to get back over the Kumo cloud. And right now, we'll say the 105 to 110 level is key resistance, bottom and top of Kumo cloud, respectively. If the market can get above that, then it can make a serious topside run. But for now, This market's not doing much of anything, nothing. All right. So just something to think about as you're moving forward. Your money can be put somewhere else. If you're just holding the Theta as a long-term investment, that's fine. But if you're trying to trade it, it's not giving you much to go on at all as a trading vehicle at this time. All right, looking at silver. Silver is in a bull market with a bearish trend momentum reading. So we've been getting downside production. It started back here when we got the crash alert the week of May the 5th, and the market waited 3 days and then finally gave up the ghost and started giving us downside production. All right, the first target has been met, which is the top of the Kumo cloud. The second target is right here at $23, the bottom of the Kumo cloud. It goes from $23 to $22.50. All right, that's going to be your secondary downside target. Once that's hit, I don't think the market's going to stay in free fall. I mean, it could go into free fall if it drops outside of the cloud. And if it does, though, it's coming all the way down here to that $20 level and maybe even below that. So for the bullish perspective, you don't want to see that. You don't want to see price action fall out the cloud. You want to see the bulls start defending around this point and for the market to relock in on the bull side and start rallying. But for now, that's not the case. The market is showing weakness. And as long as you have a bearish trend momentum reading, you're in sell the rally mode. All right. Next up, we got Nat Gas. So been watching the Nat Gas. All right. I think this one is really trying to do something. It got into the Kumo cloud here, and now it's neutralized. All right. So I really need to see it get above $3. If it can get above $3, and I think it has the potential for a serious run, but as of right now, you're neutralized. So there's nothing you can really do here in this one, except for wait and see what happens when it comes off neutralized. Next up, we got the Dow. So in the Dow futures here, we got a bull market with a bearish trend momentum reading. Now, the market did rally today, but when you look at the algo chart, you can't really tell, can you? Because you're in a very wide trading range and the market isn't doing anything. It's staying muted. No matter what happens, you're in the sell the rally mode. So every rally is getting sold. Every rally. Sold, 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 and sold. So nothing to see here yet. Now, can the market do something? Yeah. I mean, it's been testing the 33,000 level. It got close. It got real close. It got to 33,061. And then yesterday was 33,032. So it tested the 33,000 level. Today was day 2. It didn't break it. All right. And it's still early yet. It still could come down here and take out the 33,000. Overhead resistance now is at 34,000. So that's a tight range. 34,000 resistance, 33,000 support. That's 1,000-point trading range. It goes back to what I was saying about the market being in a very wide trading range. And that's what you're seeing right now. A very wide trading range. Not a whole lot to do in a market like that. There's nothing you can really do except for sell the rally mode, because that's what this is. Sell the rally mode. And that's what you're looking to do in a situation like this. All right, next up, we got the NASDAQ 100 futures. And you can see here, it is a chart that is looking like Apple and looking like Microsoft, right? You can see that this market is in a bull market and it has a bullish trend momentum reading, which means you're wide open to the top side. You don't have really any key resistance areas to speak of. The market's wide open. And because it's a futures contract, there's no gap on it. So, but because you got gaps in Apple, computer, and Microsoft, that could put a pause in the NASDAQ 100, give you a crash alert up here in a day or two, and then the market will pull back while Apple and Microsoft are pulling back. And then that could get you down to this 13,000 level. All right. Well, and we'll call it 13,000 ish to test the top of the Kumo Cloud support. And I think that that level will be a very strong resistance. All right. A very strong resistance level. So I don't think you have a lot to be concerned about at this level. All right. So between 13,000 and 12,800, we'll call it, that's your air pocket. So 13,000 and 12,800 is your support zone for any pullback right now in this market. Okay. Just something to think about on the NASDAQ. It's wide open. There's nothing you can say or do about it. It's wide open. All right, next up is gold. I know silver and gold is making people nervous, but there's good reason because you're in a bull market, but you got a bearish trend momentum reading. You had the initial crash alert. The market waited into the fourth day, gave you the downside production, but not just yet. Gave you another crash alert. Then the market moved down just a little bit more. And now you're really starting to get the downside production. And the market has now reached the top of the Kumo cloud, which is cool. You want to see this, right? So $1,969.62 is your top of the Kumo cloud support. But that 1900 is the psychological support. That number is way more important than any other numbers above. That 1900 is a major psychological zone, to the point that if triggered, the machines will be triggered and they will dump the gold. And you could see $100 down day in gold. We haven't seen one in a while. And I can only recollect two in the last decade. So it's a rare occurrence, but it can and does happen. Just some FYI. Let's see here. Some of the comments. Aaron says, peace to the algo god. Dex, keep up the good work. Thanks, Aaron. I appreciate the support and love there. And then we got another one, KR. Thanks you, Dex. Appreciate your expert analysis. Hey, that's what I'm here for. I appreciate the love. All right. And then let's see, my man Josh says, with regards to Caterpillar, Trump is talking about gas pipeline and dig, baby, dig. If markets are forward looking 12 to 18 months, it makes sense for Caterpillar starting to make some moves. That is a good point. And yeah, 12 to 18 months is a key cycle in markets. It's a forward-looking thing, but it also corresponds to rate hikes and interest rate cuts. Any type of stimulus that the Fed does specifically toward markets takes about 12 to 18 months to trickle through, make its way through. So 12 to 18 months is a key thing in markets. Let's see here. When do you think markets will start pricing in a Trump presidency? Not saying he's going to win. That's another good question. Some argue that the market hasn't priced in a lot of things just yet. Like it hasn't priced in a recession. It hasn't priced in just how bad the global economy is, especially the American economy. There's a lot of things like that. And the way to explain it is this: everything that can be known or that is known is already priced into the market. All right. But it goes beyond that. It's not just the available knowledge that the market prices in. The market prices in what it thinks about all available knowledge. So, for instance, the talking heads have been saying it so much that the market is starting to feel a certain way, meaning that because you keep hearing them say we're not in a recession and we're not going to have a recession, or if we do, it's a soft landing, stuff like that. So the market is acting as such. It's not acting. The market does not believe in anything negative right now. It only believes in nice roses and ponies and unicorns and rainbows. Okay, that's what the market is. That's what's priced in the market right now. If the market believed in disaster, then we will see disaster, and we will see new 52-week lows across the board, and we're not seeing that. We're not seeing it. We're not seeing that. So just something to think about as we move on. All right. S&P 500. S&P 500 futures is in a bull market with a bearish trend momentum reading as well. And the rally that it experienced today was a little bit more significant and substantial than the Dow. And the market stopped short right around that resistance point. 4,200 is a key resistance zone in the S&P. The S&P 500's trading range is very wide. 4,000 is key support. 4,200 is key resistance. So you have a 200-point trading range in the S&P 500. That is quite a range, but it's been in this range for a long time. All right. It's been suspended in midair for a long time. All right. Market is not trending. It is consolidated at this time. And that's what we're seeing in these markets. I like that, Thomas. He says equity markets believe in unicorns and rainbows, but bond market sees inverted yield curves everywhere. I know the bond market is a whole another ball of wax. All right, crude oil. Okay, crude oil is neutralized, so we're waiting to see what's going to happen. We already know what's going to happen. It's just a point of when is it going to happen. This bearish pointer is going to be taken out at some point. Last time we had a bearish pointer like that was at a new 52-week low, and we had another one here. This one took out this one as it should. All bearish pointers and bullish pointers and gaps get rectified. This one took a long time. We went all the way up, then came all the way down, and so finally took this out. Now we got another down leg to come and take this one out. And the market needs to do it without creating another bearish pointer so the market can rally. If the market were to explode higher and rally now, it would not be sustainable because this bearish pointer is back here saying, hey, you forgot about me, and the market will need to come back and pick it up. Okay? Just something to think about moving forward. So we're not touching oil. It's neutralized. We'll wait till it comes off neutralized. Next up is the Russell. Now, the Russell has been the weakest of the stock indices because it's below the Kumo cloud. Even the Dow, it has a similar chart pattern, but it's above cloud, not below cloud. So you're in a bear market, but you have a bullish trend momentum reading, but the market cannot stage a bear market rally. Now, we had this positive bot check, and then today we get a nice little rally here in the Russell. But again, it cannot break 1,800. 1,800 is a key resistance zone for this market right now. If it can break it, then the next challenge is 1,850. All right. And then after that, you got more upside when you get up there toward the 2,000 mark. So you got a lot of overhead resistance areas for this market. And it has a long way to go if it ever gets started. So the scary part is right now, the Russell could actually roll over and start, and the bear market could reclaim the price action at any moment. The longer this thing fails to stage a rally, the more this becomes in jeopardy and it will inevitably turn red. All right, so just something to think about moving forward in that one. Looking at the US dollar index. US dollar index has not changed. Top side overhead resistance is 103. Support is at 101. And the market has not broken support nor broken resistance. It's just there saying, hey, how you doing? What's up? As it was spending a long time at the bottom end of the range. Now it's spending time at the top end of the range. And it hasn't broken it. Nothing's happening. So we expect for this market to continue to drift sideways for the time being. But remember, it's in a bear market. And the market can reclaim the price action at any moment. And the longer you just move sideways like this, the higher degree of a chance that this green line is going to turn red because the market can't rally. Okay. Just something to think about as this wide trading range exists. 103 top, 101 bottom, and we're starting to see this displayed in a lot of different places. So a lot of trading ranges, folks, a lot of trading ranges. All right, next up is Ethereum. So you can see here the Ethereum is in a bear market with a bullish trend momentum reading, just like Bitcoin, but it's not moving. It's not going anywhere. It is also stalemated at this point, but we're only 2 days into it. And the rally alert can lead the market 3 to 5 days. So we expect to see, this type of a thing. But just remember, you're in a bear market. This is a counter trend move, a counter trend trade. So the market can definitely go in and reclaim the price action, and this can turn red at any moment. Just something to think about, you know. Matthew, let's see here. You said BBBY. I never heard of that. What's BBBYQ? Is that Bed Bath and Beyond or something like that? I don't think I'm familiar with that one. Let me see. Let me see if I can pull that up. BBBYQ. Okay, yep. Triple B is Bed Bath and Beyond. So I'm assuming you mean that. All right, let's pull it up. Oh wow. Okay, the BBBY, triple BY is not coming up. Okay, you talking about the OTC? Okay, hold on. Okay, OTC. Let me try that one. Yeah, because I think they're gone. They're out of here, man. Let me see here. Okay, I got them. You know what? It's almost like they've been delisted. Let me check out the Let's see, Bed Bath. I'm not getting the over-the-counter pink sheet ticker for it. I only see the NASDAQ one. Yeah. And I see some foreign exchanges, overseas exchanges, but let me see if I can pull up Frankfurt. Maybe that'll give me an idea of what's going on. Let me see. See what we can pull up. Okay. Okay, yeah, no wonder it got delisted. Man, it's at 16 cents. Okay, Bed Bath Beyond is out of here. They're gone. They're done, man. Okay, here on the Frankfurt exchange, because I can't pull it up in America, because it was on the NASDAQ and it got delisted because it was you can't trade less than $1 for a certain amount of time on the NASDAQ or from I think even in NYC it's the same way unless they change their rules. So yeah, you can see here 16 cents, and this was on today. So yeah, this is recent. So on the Frankfurt exchange, it's 16 cents a share. So yeah, this stock is done. This company is done. It's out of here, man. So yeah, you're in a bear market, and it's been in a bear market for a minute. Nothing's happening, and now you're neutralized too on the daily chart. So even if this was an active chart still on the NASDAQ, I couldn't touch it because it's neutralized. Here on the weekly, yeah, you just bled out. This market is bled out, and now it's neutralized. So I couldn't touch it anyway. It's been neutralized since the 15th. So this is day 3. So for the past 3 days, this market is neutralized, and tomorrow will be day 4. It's neutralized for tomorrow's trading too. So I have no opinion on that one except for I got to sidestep it because it's neutralized. How low can gold go before we worry? It's just like I showed you when I did the gold analysis chart. 1900 is the key support, psychological support for gold. We want to see the market test that and hold it and not break it, not close below it. No consecutive closes below 1900. If the market cannot hold 1900, that's where you worry. You worry if gold cannot maintain 1900. Because if it can't, then it's going to fall. And I mean, it's going to fall precipitously. So that's what's up. Oh, likewise, brother. Things are good, man. Just over here working hard, man. Because there are big moves coming in these markets, folks. And I mean big. But you got to be prepared for it. You got to be prepared. You got to have your discipline on point. You got to have your trade tickets ready because the market's not going to wait. It doesn't care. It doesn't care if you're ready or not. You got to have your trade tickets up and ready or the market's going to move without you. So that's why I preach when you get the reports, please, pretty please, put your tickets in. I don't care how far the market is away from your entry price. It's irrelevant. Put the trades on and wait for the market to come to you. It's just that simple. And then once you're in the trade, you let the market, manifest. You let the trade develop. All right. I use the pop method for intraday thing. If I'm deep in the money and profit on a trade and I'm considering cashing out, then I'll use the pop method for that. Otherwise, I normally do not use pop because what I like to do is be in trades and ride the whole trend until it changes. Like once I get a rally alert, I'll go ahead and put my trades on. Once triggered, I ride that until we get a crash alert. No matter how long that takes, I ride it until we get a crash alert because then that's my signal to get out, right? That's how I do it. I use the recommended stops on the report. That's what I do. All right. So now you know. All right, folks, you know what it is. The system works if you work the system. Bulls make money, bears make money, and pigs get slaughtered. So remember to take what you can and give nothing back. Smash that like button. And if you haven't already done so, subscribe so you can be notified when I upload new content. And you can also follow us on Twitter. The information is in the bottom of the video to follow me there when I put out tweets. Also, you want to go to pulsewavetrading.com and take the 14-day challenge when you can get these reports in your hand for free for 14 days. Trade alongside us and see how well you do in the 14 days. Prove it to yourself. I think you will be amazed at the results. All right, folks, I'm out of here. Until the next one. Peace.